In today's video, I'm going to cover a simple entry and exit strategy that you'll be able to apply in your day trading as a beginner, or even if you have more experience. But what I want to do before we hop into this video is essentially simulate what most beginners do when they want to learn how to trade in the stock market, which is opening up a Robinhood or Thinkorswim account, depositing $500, and randomly throwing their entire account on a risky option contract. So let me go ahead. I'm going to place an order. We're going to buy some NVIDIA puts for $400. And then at the end of this video, we're going to check in and see if I end up making or losing money. I could lose this entire $400, but this is what not to do. And my goal is that by the end of this video, you will know the proper way to go about entering and exiting a position, actually having the education to do so, and not just throwing money on a random contract through intuition like most people do. But with that said, let's go ahead, let's send this order through, and there we go. At the end of this video, let's see what happens. And with that said, let's hop right into it. Now, what I want you to do is open up a chart. Whether you're on Thinkorswim, TradingView, or another broker, you should have access to see a chart, to read candlesticks. And what you have to do is pull up a 1 minute time frame where each candle represents 1 minute of time. Now, I've actually gone ahead and I've added this 1 minute time frame, and I've decided to look back at the last 5 days. So my view is on a 1 minute candle looking back over 5 days. Now, I've pulled up SPY, the S&P 500 ETF, which you guys probably know of. Now, the only other thing that you're gonna need to know how to do is draw a support and a resistance level. So you can use drawing tools or however your broker allows. All you need to be able to do is draw out a line, okay? Draw out a line like that, and then you should be good to go. So here's what we're gonna start by doing. Step one, you are gonna go back to the last day, and what you're gonna do is you're gonna chart out the daily high and daily low. So our support and our resistance, or our key levels on that day. Now I'm gonna show you an example of how I properly did this yesterday on Tuesday. So yesterday, you could see this is yesterday's chart, okay? And I was looking at the previous day, which was Monday. You can see here. Now, I essentially marked out our daily high and daily low. So this would be our resistance area, and this would be our support area, or key resistance, key support, on a 1 minute time frame looking at that day. So you can see we actually had 2 tests of that resistance area, okay, which was sitting at about $547. And then you could see we pulled back and we had 1 test of this support at 542.72. So we could see the highest price at which SPY traded at during the previous day. That is where we want to mark out our resistance. And then we're going to look at the lowest price at which SPY or whatever stock was trading at during that previous day. And that would be our support. So we've got our key level of resistance and our key level of support. Now, let me show you what happened. If I go back to Tuesday, you can see we actually tested that exact level, which we had marked out from the previous day's session. And that was actually a 3rd test. What happened was we ended up getting rejected. And then because of that rejection, what I looked to do was play a move down to our key level of support. So you could see we had 1 test, obviously, in the previous day's session of support. We had 2 tests during our aftermarket session. So the way in which I would have gone about managing this trade was, well, the market opens, we've got our levels set. If we get rejected at resistance, I would look to short down to support. And if we end up breaking through resistance, then there's no trade there for me to take. So you can see what happened was we got rejected at resistance, and then I would have entered upon waiting. Okay, looks like we definitely are rejected. You could see that, we had 1 candle test that area. We ended up retracing. We started trending down. I would have taken this as my sign to enter. And then you could see as we continued trading lower highs, lower lows throughout the morning session. And then the end of my morning session, because I trade from 9:30 to 11, we ended up hitting our target. Now, this is great. I'm saying this on this video looking back. in time, but I actually want to just throw up some photos from my Instagram story. I actually posted this on my Instagram, and you can see I actually did have those levels drawn out during the pre-market session. So I want to give you an example. This is what I would do during today's session. Now, when you're trading like this, obviously all of this trading I am referring to is done on a 1 minute time frame. This is day trading. This is very high paced and fast frequency trading, but you can do this on any stock, on any chart. And you'll do this in the morning before market open. You'll look back at the previous day's session and you will draw out the support and resistance. Okay, so you'll just identify that daily high and daily low on that chart. And then going into the next day's session, obviously we're waiting. We've drawn out our levels. The market opens. We are waiting to see if we end up breaking above resistance. If we do, then there's no trade. If we get rejected at resistance, then we can short to support. Now, this obviously is not going to be applicable every day because you can see, obviously, we ended up gapping up so much. We really rallied during aftermarket and pre-market session on SPY. So this morning, if we were to go out and draw out yesterday's high, that had already been broken in our pre-market. Obviously, yesterday's low we had moved off of so far, so there wouldn't have been any setup to even look for. So this is not going to apply every day, but it is going to apply at least once or twice a week. So based off of obviously what stock you're trading, you'll have various opportunities, and based off of the way the market is headed, you'll have various opportunities as well. So I hope that makes sense. I wanted to just give you guys a simple yet effective entry and exit strategy. Now, obviously trading is not quite as simple as that. However, that is a element or piece that you can add into the way you're currently trading, or this will be added into another means of making those decisions and making money at the end of the day. So let's check in on our position and let's see if we ended up making or losing money. And real quick, I just want to mention, if you guys are interested in learning how to trade, I've actually been trading myself for the past 8 years, and I'm going to put a link in the description below to my mentorship group where I'm essentially going to give you everything you need to know to find that consistency and profitability in the stock market yourself. Now, if you want to learn more, the link will be in the description below. And with that said, let's check in on my position. Okay, so ready? Oh, it looks like we're down. Okay, so we are down 4.3%. This is what I expected. This is what does happen to most beginners. They'll come into the market and they'll end up losing money. So unfortunately, you can see we are down. I'm gonna go ahead and close out this trade here. Hopefully we can get out here without losing too much. So let's send that order through, and it looks like we got filled. So we only ended up losing 2%, which is not that bad, but I have seen beginners start out and end up blowing up their entire account. So don't let that be you. Click the link in the description below, subscribe for more, and I will see you all in the next video.